There are many offshore schemes, absolutely legal, that 90% of businessmen ignore and that major corporations are using. Given that it's very bad publicity to be exposed as a tax-dodging company and to avoid being exposed, companies try to keep these operations complicated. When Starbucks was called out in Europe for avoiding tax, their revenue fell drastically, and stock prices suffered. Big companies, such as Amazon, Starbucks, Apple, or McDonald's, are using deep and absolutely legal offshore schemes that let them reduce almost 90% of their taxes. Modern-day tax structures are not as simple as they were in the 1980s. Companies, basically, analyze the best alternatives around the world to develop a taxation model that minimizes the impact on their after-tax earnings. Let's see how it works. First, they set up a company in Bermuda, a country with zero taxation. Let's call that company ABC Bermuda Holdings Limited. Then, they use that company to purchase a company in Ireland. Let's call this company ABC Ireland Limited. This is a shell company, so it won't actually cost anything. Then, these two companies are merged into a company that we will call ABC Holdings Limited. Now you have a functioning company in both of these countries that is managed from Bermuda. Ireland is not a tax haven. It has a 12% corporate tax rate, which is not bad, but much worse than 0%. According to the Irish law, if a company is managed from somewhere else, it's taxable elsewhere, and in fact, the taxation for ABC Holdings Limited is what you can guess, 0% tax. So, then, you give ABC Holdings Limited all of your intellectual property, your brand names, technology patents, systems, etc. Then, another company is going to be set up in the Netherlands. Let's call it ABC Netherlands Limited. Then, ABC Holdings Limited licenses out all of these intellectual property rights to this new company in the Netherlands. The Netherlands is perfect for this, because it has a nearly 0% tax rate on revenue from intellectual property. Also, the Netherlands has an agreement with other European countries, stating that money can be transferred from country to country, tax-free. Okay. So now let's add some numbers to this. Let's say your company sells your product in the United States and makes a $100 sale. After all variable and fixed costs, you would be left with a pre-tax profit of $50. If this statement ends up here, you must pay taxes in USA on those $50. But no. Because we need to add $50 of expenses for fees related to the use of the brand name and all the intellectual property involved in the production of that product. We will pay this to ABC Netherlands Limited, that is the current license holder of all these intellectual property. Well, suddenly, for every $100 in sales of a product in the US, you are paying $100 in costs, and ending up with a zero pre-tax profit in that country. Now, the money is in the Netherlands, and ABC Netherlands Limited just made $50 in revenue from its intellectual property, for which it holds the license. Remember that tax rates on intellectual property in the Netherlands is super low, almost zero. Next step. The ABC Netherlands Limited cannot sit on this money, or else, it will count as a profit and it will need to pay a 25% tax rate. But, as ABC Netherlands Limited does not actually own the intellectual property, it has to pay for that licensing to ABC Holdings Limited in Ireland. The licensing fee is, surprisingly, $50. Now ABC Holdings Limited of Ireland has the money, but remember that according to the Irish law, if a company is managed from somewhere else, it's taxable elsewhere, and hence, it can take that money back home and pay taxes there. In this case in Bermuda, at a 0% tax rate. At this point, you have avoided basically paying any form of corporate tax. This is one of the simplest structures of this type. It's called the double Irish with a Dutch sandwich. This scheme is perfectly legitimate. Companies must justify moving this money around from country to country. They must provide to national governments a legitimate reason for these funds transfers. Although not illegal, it seems not an ethical practice. On the other side, it is a struggle for a lot of businesses not to engage in this type of activity, because if they don't, their competition will. With less money going to taxes, and more money left over, that can be used on expansion, or research and development, or in paying back to their shareholders. Eventually, they are going to be more competitive as a business, and that could over time start driving your business out of work. This scheme is not going to be possible after 2021, due to new tax laws passed by the Dutch government, under a lot of pressure to get rid of this scheme. It is almost inevitable that some accountants with a team of lawyers already has the next structure ready to be implemented in 2021. It is impossible to keep on top of every legal loophole from every country out there. These schemes will continue to exist. For the Netherlands, this scheme has meant tens of thousands of high-paying jobs, with top consulting companies setting up major operations there to facilitate these structures for their international clients. If you made it this far, I hope you enjoyed this video, and thanks for watching. If you can leave some comments on your thoughts about this type of schemes, or suggest subjects for new videos, it will be much appreciated. Also, please help this video to be shared broadly, clicking the like button. See you in my next video.